we've built this kind of journey that has lessons that are experiential with an AI coach that nurtures and nudges things that help you make the right decision.
Whenever I think for anything, first is the domain name available, because there are millions of businesses around the world. Even you don't know that the name you think has been taken away.
I think we went through hundreds of names before eventually landing on Arro. I won't say that we chose it just because there was a domain available. Arro represents someone on a journey and someone kind of slow and steady growth and journeying and development and eventually kind of like hitting a goal or target or etc.
Your insight on upcoming industry trends and how you are adapting to remain ahead.
In my space, I think one of the biggest trends is there is a lot of push towards open banking, which means using cash flow data. You already see the bureaus trying to build their own cash flow scores. You've just seen the Vantage score create another evolution that incorporates cash flow data. So I think there is a macro trend right now, which is where the industry had to head and does play a role in some of the recent regulation.
Hello everyone, welcome to the Innovative Circle podcast. I'm your host, Dr. Shah Siddiqui, CEO of Time Research and Innovation and GenZ marketing agency. ICPcast is an initiative to bring innovative ideas, transformative strategies, and forward-thinking insights from various industries, whether it is in technology, artificial intelligence, marketing, finance, tax or accounting, or sustainability. We bring you insights from the brightest mind and C-level executives and industry leaders who are shaping the future. In today's episode, we are thrilled to welcome Ryan Duitch. Is the CEO and founder of Arro. Arro is a fintech platform making credit more accessible, fair, and educational for millions of underserved Americans. With a background in finance, entrepreneurship, and venture-backed startups, Ryan launched Arro to help consumers gain credit without high interest rates or confusing systems. At a UC Berkeley and USC MBA graduate, his mission is to combine low-interest lending with real financial literacy. Under his leadership, Arro is breaking down the barriers to credit and building a future where everyone can participate confidently in the financial systems. So today, we will discuss rewiring credit for 150 million Americans. Ryan Duitch, vision for Hello, Ryan. How are you today?
Hello, Dr. Shah. Great to be here and thanks for having me.
Thank you, Ryan. As you know that Innovative Circle podcast, we ask the same question to any of our guest speakers. And I'm going to be doing the same for you. So we have a set of questions that we ask to everyone to understand how you are changing the game. So the first thing I wanted to ask you, could you provide a brief overview of your business and share what inspired you to enter to this field?
Yeah, absolutely. So I guess I could start at the beginning and that will lead to the overview of the business. But Arro was really inspired by talking to customers and people all over the country, trying to understand what their problems with credit, spending, and debt have been. And what I learned from a lot of this discovery was just how broken the credit system really is in the US especially, and at a global scale. There's so many good people that are afraid of overspending and the debt trap, that don't trust institutions, and yet are judged based on where they are today versus where they might be able to go. And what I started to see was something much deeper, which is there's so much potential that people have, but without an ability to manage money or the knowledge and tools of how to manage money, how do we ever expect to be able to make the right decisions for whether it's lending or spending or savings? And I started to say lenders have always evaluated people based on a moment in time. But what if we could unlock something more if we helped people make better financial decisions? I started figuring out what people fear, what they value, what they would do, what they didn't even know what to do, but they might do, and started to say, what if we could create a credit product that directly tied people's behavior with stepping stones into a more successful path. And so that's what Arro has done. And Arro has built a whole new kind of credit platform that says we're going to approve people that others might not by looking at them differently, by looking at some alternative data and setting the stage for what they might be able to do if someone partnered alongside of them. And so what our company does is we will issue a credit card to folks that starts somewhere up to $300 as they set financial goals, as they take educational lessons. We've built an entire financial literacy program. We gamify it. So we increase their credit line. Set a goal, grow your credit line. Complete a lesson where we survey, we quiz, we have an interactive experience, grow your credit line. To keep growing, people need to make payments. And those are designated by a risk score that we've built that says some people can accelerate fast. They will need to do 3 steps. Others might accelerate a little more slowly. They need to do 7 steps. We have an AI coach that kind of nudges and nurtures along the journey, guiding into how to build better spending habits, how to optimize for credit score growth and more. And so, what I say is this journey really inspired me to think about a new way providing for and setting people up to be successful. And what we've built is a platform that can help shape behavior, drive different habits and other financial health considerations. And we do it by providing a real credit product, a fully unsecured credit card with a lot of tooling around that.
Thank you very much, Ryan. As I have poor credit score due to my brain tumor surgery in 2009, I can understand your process. So that time, if I would have something like Arro in the UK, I wouldn't have to face lots of struggles. So I understand the innovation that you are making towards user-based, and it will transform many people, because I understand that sometimes a little bit extra help can steer your growth to the next level. So I can imagine when I started, after my operation, I have to take 5 years gap, and that 5 years was very crucial for me. So I was credit default, and I could not get any credit cards, loans, nothing, and I have to build it again. So if I would have a system like this, I would tailor my methodology differently, because I have to struggle to have my graduation, master's, PhD, all those things working alongside studying. Yeah, it was great to achieve those things, but with the struggle. So thank you very much for adding this value to the audience.
Thank you.
So my questions, I understand that you wanted to transform the future of lending. Why you have come up with this solution? Maybe you have any personal story to tell, or anything else that you wanted to share with our audience.
Yeah, and to your story, the hard part is when you've gotten into a situation, even getting started again is really, really difficult. And where we've focused is how you get credit is an important consideration. We use some alternative data. We don't use credit scores. We use other pieces. But where we've really specialized is what happens after. Even if you do get credit, whether it's your situation or someone else's, which is whether they've made a mistake, whether they don't have it. And immigrants coming here need to build credit. And sometimes you need to have credit to build credit. Students, people who've made mistakes. Once again, what happens after is not where a lot of companies have focused. Many lenders out there give you money and they clip their coupons and fees and interest and whatever it might be, and they just charge you more to make up for the people that can't afford it. The thesis here is everyone deserves an opportunity. We're continuing to expand who we can grow and build our consumer base around, but how do we help you make the right decisions so that the next time you don't make the same mistake, or whether it's your first time, you don't make a mistake. Why does someone want to build their credit? Well, I want to get a loan. Well, what do you want to get a loan for? Well, do you need that loan for that? Are you going to be able to manage that? Right? Money management is not taught. Financial literacy is not a required course in schools, and it's not the most intuitive. Even very savvy people who have gone through years and years of education, when it comes to financial management, it's tough. And so how do we provide tooling around that using AI, using behavioral gamification, behavioral science, and more? And that's how we've tried to differentiate something where we say people are a lot more than what you give them credit for. No pun intended. And, you asked back to kind of, why this, right? And it really goes to the story I shared on what inspired me. The more people I talked to and the more I learned, I started to say, well, who will do this? If not, me, then who? And if not now, then when? I came up with a thesis that was built around an industry that has seen very little true innovation. Most of it is in different product sets, but in unsecured credit cards, in revolving credit cards, there are very few players who've been able to really innovate. If you look at the neobanking space, most don't have unsecured revolving credit cards. If you look at a lot, they use other products. Keeping a line open for a long period of time is really difficult. How do you predict where someone will be 3, 6, 12, 18 months later? Keep going. Life is constantly in flux for a lot of us. Whether you have high income or low income, life is forever changing. The idea was, and once again, where all that inspiration came, was speaking to hundreds and now thousands of people over time. There's so much more to people, to humanity, to the opportunities that are not provided or provided with limitations. And all of that led me into we have to build this. And if we do, this product doesn't just need to exist, but it starts to really set some major disruption in how other lenders treat their customers.
That was a great explanation, Ryan. Thank you very much. I just wanted to ask you my third questions. Could you discuss the key issues in your industry and explain how your efforts are making a difference for your clients and collaborators?
Yeah, absolutely. So, we're making, we have a handful of really exciting kind of stats and anecdotes from, something as basic as you've really helped me make sure I can afford gas, groceries, and other essential needs, to you've been helping me build my credit score, and now I'm able to rent an apartment or get a car, or my real dream is to buy a home and I need steps to get there, to people love the education. We've built this kind of journey that has lessons that are experiential, with an AI coach that nurtures and nudges things that help you, once again, make the right decision. And people really love. We've heard so many people say, I'm learning things that I knew but forgot or never knew. This is helping me avoid mistakes elsewhere. You're helping me reduce debt, in other places, pay down high interest this. We're much more than just a lender or just a credit product. I say we're really a behavioral platform that is using our credit product as a way to capture data and drive behavior and create a much more engaging and loyal based system that can do a lot more than just a traditional loan. A lot of the times they don't even call us a lender. And with that platform is intended to be replicatable to either other lending products or without. We're talking to companies and employers all over right now about just taking our educational platform with an AI coach, with nudges and experiences and goal setting and budgeting behaviors and more. And so we're seeing a lot of excitement, both on the credit side, from building to access especially. Someone early on said we've helped change their life. A very low limit card. Why? Because someone just needed to give them an opportunity, because you need to start somewhere. On the other side, we're investing a lot into how to establish better behaviors, make smarter financial decisions, build habits. And we're seeing it play out in people who are increasing savings, who are spending more healthy. Tying those together gives us a very wide array of how we're able to have an impact on our customer base, and hopefully a lot more to come.
That's great, Ryan. So my connecting questions: who are the clients you aim to help specifically, and what key benefits do you deliver to them?
Yeah, so, we have three main groups of people that we're looking to help. One is the credit challenged. I've made a mistake and I'm trying to get back into it, similar to your example. And there are, unfortunately, thousands of different examples and stories, from the college student who didn't realize how credit cards worked and didn't realize how interest and all of that impacted credit scores, to the medical example, to relationship examples, to, car, et cetera, et cetera. And that's one group. Another group is kind of that college student, post-college student. I'm looking to get into my first products and I don't want to make mistakes. So we start you off a little smaller and help you grow. We're also cheaper than other providers. So, we find a balance to kind of solve for, I'm getting my first credit product. How do I build it in the right way? And we help you make a lot of credit-based decisions that go into what's next and what's the next product for me, et cetera, et cetera. And then the other group is really the immigrant who is coming to the US and needing to build credit. To get an apartment, you need to have a credit score. There's a lot of things that you need credit to have. And so those are really the three main groups that we are serving. Challenged group, the new to credit, right? The college and right post-college, and then the immigrant group that is looking to get started.
That's great, Ryan. So what makes your approach unique in helping clients achieving these outcomes?
Yeah, so a couple things. One, just the underwriting itself and the way we go about approving people looks beyond just traditional credit scores. So a lot of people are looking at your credit score and maybe some variables around it, and that's how they decide whether to approve people. We look at mostly bank data. If you do have credit data, we use some variables. We don't use the score itself, but we use some attributes that come within the report to see what you've done recently, especially. There is a lot of fraud in our industry. And so we're very protective around if there are signals around that. But we use mostly banking data, which the industry is still starting to leverage. There aren't many companies that have credit cards that use banking data out there. So that's one key kind of differentiator. And once again, the other is this entire idea of gamifying credit line increases and gamifying that through behavioral proof points. There is no dynamic, you can grow daily with us, you can grow weekly with us. Things shift constantly. How your risk score continues to adjust in our model, which touches both how you act within Arro and how you act externally, will allow, once again, different people to accelerate at different rates. That idea of a dynamic real-time underwriting journey with education as a core tenet, that doesn't exist today. And that is something that is an entirely brand new concept. How do we show that someone who is a little more educated, right, who's gotten some pieces, but is given tools to see what decisions and things you'll do actually impacts risk? This is the first time that someone is doing it in this way. There have been some very small tests in time, make payments consecutively, and there are some of those variables, but rooting in a deeply ingrained behavioral ecosystem and then constantly reassessing credit lines on a daily basis. We score people every night. That has never existed before, and we are the first to pioneer that.
Thank you. I think your target audience will find it very interesting, because if you're looking after all these constraints and supporting these individuals, they're going to be spreading this word to millions of others. So I think your success lies on the target audience that you are focusing on. So thank you very much for building this trust within your audience, and as well as delivering your product to the future of innovators, I would say, because if I wouldn't get supported with some of the people that I knew, I wouldn't come to this stage. Because when you wanted to get your profession or maybe your future ready, your past always follow you. But if you can break that excellent thing, because I have to break my string attached to my past and then bring a new future. Otherwise, it was difficult. Whenever people think that I am disabled, I have a brain tumor surgery, they think that I'm good for them. And that is the worst thing that would happen to anyone else. So thank you very much. My next questions. Are partnership part of your business model? And from your partner's perspective, what benefits make you an ideal collaborator?
So we have a handful of partners, both in how we get in front of customers to how we build out technology. I'd say one of the key partners, and this was the hardest part to get going, it took us 2 years just to build out all the infrastructure, technology, and get a bank partner alongside of us to issue a credit card. There are a couple of ways to do it, but the common way and the easiest is to get bank to partner with you. And so we've partnered with a bank that essentially shares their lending license with us. It's called a sponsor bank model. And that took 1.5 years and was a really, really big hurdle to overcome in getting live. And they're a key partner to us in allowing us to even issue cards, run through the network networks, et cetera, et cetera. The networks are MasterCard, Visa, and such. And that's one of our most important partners. We have some other technology partners that we use, how we collect bank data, how we run identity checks, how we operate and build systems, but we have built almost all the technology ourselves. And then right now we're working on some exciting partnerships in how we support members. So we have some we just partnered with one of the largest nonprofits in the country that is helping send some of their, customers and members to us. We're right now looking at partnering as we're starting to embed our product into other organizations. So we're looking at partnering with some major banks and insurance and other institutions that want both the educational platform as well as the expanded underwriting criteria. We're talking to a very large bank right now that there's a lot of people you don't approve or that you can't bring in. How do we help you expand how you're thinking about things, but do it in a way that does right by people by giving them tooling and education and, et cetera, et cetera. And so, partnerships are a really core part of both how we acquire customers, how we serve customers, and how we're able to even operate our business.
Thank you, Ryan. Thank you for your conversation and share your experience with our audience. To all our viewers, thank you for watching ICPcast. I'm Dr. Shah Siddiqui, and I have Ryan Duitch, CEO and founder of Arro. For now, we are taking a brief break before dive deep into some fantastic insights. Stay tuned. We will be right back.
Great conversations start with thought-provoking ideas, and visionary leaders turn them into reality. Meet Dr. Shah Siddiqui, an entrepreneur, AI strategist, and business growth partner dedicated to helping professionals and companies push boundaries, innovate, and thrive to drive transformation.
Did you know that 92% of executives consider digital transformation and AI adaptation are essential for staying competitive in today's market? Furthermore, companies that use data-driven insights for decision-making also see a 23% boost in profitability compared to those that don't. Through ICPcast, we bring together the brightest minds in AI, business, finance, marketing, and other tentative fields to deliver strategies that drive measurable success.
Dr. Shah is the founder and C-level executive and leads multiple startups, including GenZ marketing agency, Neurodivergent Business Consortium, NBC, Time Research and Innovation, TRI, and Green Threads DPP. He is AI and technology expert and helps businesses harness AI for scalability and efficiency. He is a sales and business growth strategist and the creator of the Sales Funnel Accelerator, SFA program, to guide C-suite executives to maximize conversions and revenue.
You might be surprised to learn innovation isn't just about your ideas. It's about execution. In fact, only 10% of companies successfully turn their innovative ideas into scalable strategies, while the rest struggle with execution. Businesses that focus on effective implementation rather than just ideation 3 times more likely to outperform their competitors. After working with industry leaders and disruptors, I have learned one thing: success isn't just about what you know, it's about how you apply it. That's why I created Sales Funnel Accelerator and ICPcast to provide actionable insights that you can apply right way to drive business growth and innovation.
Podcasting is now one of the most powerful tools for business influence, with 80% of listeners taking action after hearing expert insights. And when it comes to driving sales, 78% of social sellers outperform peers who don't use social media for business networking.
Are you ready to be the part of the conversation that is shaping the future of business? Let's explore innovation, strategy, and leadership together. Book your cast with me today. Welcome back to ICPcast. I'm Dr. Shah Siddiqui, and I have Ryan Duitch, the founder and CEO of Arro. We got some exciting insights coming up. So stay with us as we dive deeper into the world of finance, technology, and innovation. Let's get started. So Ryan, half of the previous segments, we talk about individual questionnaires, and we have got an exciting insight of your business. I just wanted to ask you one question. You have named your initiative Arro. Why did you name it Arro? What's the reason behind it?
Yeah, good question. Naming a company is really hard. And I mean, we went through so many names, and many of the names we wanted were either already trademarked, taken, used. We saw one that Amex had basically had in their back pocket that they trademarked like a decade ago and never got used. So, and then you need to make sure there's websites and domains available. And so I think we went through hundreds of names before eventually landing on Arro. I won't say that we chose it just because there was a domain available. There was a lot of meaning behind it. So Arro represents things, including, there's the idea of getting to the tip of a mountain as you're kind of climbing higher. Shooting a bow and arrow is something that is soaring above and landing on a target. There's a lot of kind of meaning behind the terminology of what arrow means when you look at the actual word itself, going back to Latin and more, that just represented someone on a journey and someone kind of slow and steady growth and journeying and development and eventually kind of like hitting a goal or a target or et cetera. And it seemed really resonant to how we were approaching this space, which is, this is not a quick money today product. This is not a traditional product. This is a different kind of journey together. We're really trying to do a lot more for the customer. Once again, through this experience, education isn't optional, for example. Most people talk about things they're passionate about and allow customers an option. For us, we've created this experience where everyone goes through something a little different, but is meant to really set you up to be successful. And the word Arro seemed like it really resonated. Obviously, we dropped the W from it. That was for the purpose of domain and more. And it fit really well with the kind of mascot and AI financial coach that we ended up developing.
That's a great explanation because, as an innovator myself, whenever I think for anything, first, is the domain name available? Because there are millions of businesses around the world. Even you don't know that the name you think has been taken away. Someone else is doing it. So it's very critical before you get a domain name and as well as a business, because you're going to be working on the US. But if you're thinking like, okay, you wanted to work on global aspects like UK and any other country, then you also need to think about the name. Is it taken, or is going to be like you talk about the IP? Is someone else is already had this IP, so you can't do anything. I can remember our recent product that we launched is Green Threads, so DPP. So we are launching a product that will administrate pure and as well as systematic approach of carbon auditing. So the legislation is coming in place 2027 in the EU, and everyone has to embed QR code or NFC or RFID tags to their garment. And you need to come up with a solution that you can solve these problems because it's billions of product every year around the globe. So when we register our name, we found someone in the US, they already have a registration there, but they are not doing textile, they are doing something else. So we have to clear that one from them, and then we could register our IP. So it's a hassle if we don't think properly and you develop everything and then you realize that, okay, this is not done. You need to change it again. So that's a great thing. So my next question, could you share your insight on upcoming industry trends and how you are adapting to remain ahead?
Yeah, I mean, in my space, I think one of the biggest trends is there is a lot of the push towards open banking, which means using cash flow data. You already see the bureaus trying to build their own cash flow scores. You've just seen the Vantage score create another evolution that incorporates cash flow data. So I think there is a macro trend right now, which is where the industry had to head and does play a role in some of the recent regulation, which has made open banking even wider. So I think using cash flow data and bank data as part of the world of credit underwriting is taken a while to get going, but is now starting to grow at an exponential rate. And our intention and expectation is that we are at the forefront of thinking about credit data and cash flow data differently. The key differentiator with us is that there's a lot of data that exists out there that companies and businesses are trying to leverage. Our thesis was there will always be an extremely competitive market in aggregating and analyzing existing data. We need to create a new data set that has never existed. And so that's where Arro has especially tried to do something different, which is because of our educational platform, the engagement, the way we nudge things using behavioral science, we're able to create data signals and predictive layers that are almost impossible to capture. Things businesses and banks have wanted to know for a long time, but what keeps people hooked? How do you retain them? How do you drive that? And we have a mousetrap to say, we want to assess a signal. Well, let's see what you'll do around it, et cetera, et cetera. So I think that's one. Some other macro trends that impact the industry is, inflation is, tempered slightly, but prices are higher than they were before. There is a lot of concerns around, will there be a recession? What does this mean for pricing, debt, et cetera? And you do see the consumer strain. You're seeing a lot of businesses that are having higher defaults than they've had in many, many years. And so for Arro, it is technically for us, we want to help a lot of people that aren't sure where to go. So we are able to kind of evolve in, well, if a lot of people are struggling even more, Arro is a really great alternative to A, get something going, but B, try to set yourself up to be a little more successful down the line. And those I think are a couple of the biggest trends in our space. You see the next generation had shied away from credit for a moment and is starting to come back. Credit is something that's scary to a lot of people, but it is a key part of culture and alignment in what's needed to hit financial goals. It's about managing it effectively. Debt isn't bad, but debt managed wrong can be very bad. Well, why do I use my, I've heard so many people say, I never actually use a credit card. I use my debit card. Well, why? Well, I don't want to get outside of what I can afford. Well, technically you need to use credit and pay it off to build it. If you have points or cash back or whatnot, you can optimize for things like that. There are 10 other reasons I could say why it just makes sense to use it, but it's the management and around it that really kind of impacts people. Those are things I think at a large level will become very important. Money management and a lot of money management tools are created for certain pockets of people, not for kind of like the aggregated masses, especially not for people who are living paycheck to paycheck quite a bit and are unsure where to go. There are a lot of tools built for them, but I don't think enough are robust enough with then the abilities of what to actually do for them that helps them get out of that circumstance. And the biggest one I'd say is AI. Obviously, AI is a macro trend happening across the globe right now, and a lot of functionality is starting to grow rapidly, both at a business level and a consumer level. Similar to many others out there, we have invested in AI as a way to really shape behavior, understand a customer, empathize with that customer, and then figure out what's really needed. And that level of intelligence is about to grow at an exponential rate and will help companies like mine and others provide and expand that to people out there who are trying to figure out, how do I do these things and still survive and be happy and, et cetera, et cetera. Those are some. I could go into more, but I think those cover a few of the areas that I would highlight.
Thank you very much. I just wanted to ask you, because is lots of things are happening in the US and in globally. And the key point is US Donald Trump. Are you by any chance affected through the hurdle of the tariffs and all other things?
Yeah, so for us, the tariffs do not impact us at the moment, and mostly because everything is really a technology layer. There are no physical goods. There's nothing we're exporting or importing to or from other countries. So at this moment in time, as we look to expand internationally, which eventually is part of the plan, there could be some opportunity or there could be some things that impact us. But right now, we are not impacted. I'd say the only thing that impacts, actually, now that I think about it, is more of this global mentality around what this means for businesses and spending and fear for the consumer. So I guess technically, I take it back. Technically, you could say we're impacted in if tariffs drive up costs considerably for the consumer is especially strained on what they can purchase or what they can pay back. And that has an impact on businesses that are underwriting risk because it increases the risk for consumers. So yes, technically we are impacted by tariffs more in that macro kind of like strain it has on just overall consumer health from a spending and savings perspective. And as I mentioned before, businesses are seeing increased defaults across prime customers all the way to subprime to new to credit and more. And that is a reality for kind of the global macro situation. But as far as core business functions on our costs and whatnot, it doesn't impact us like that.
Thank you very much, Ryan. So my next question, can you discuss a measure of struggle you have overcome and lessons you have applied to your professional approach?
Yeah, I mean, I'd say the biggest one being a founder is there are just so many obstacles that continue to come in your way. You know, you achieve something and you finally overcome what you've been looking to solve for the last, 3 months, 6 months, 2 weeks. And then there's just something else in your path, especially in an industry like mine that's highly regulated, that is really difficult to innovate based on the compliance and regulation and whatnot. The biggest struggles are just you have to be really resilient. You add that to all startups out there, which have seen a massive drying of capital over the last few years, outside of AI, not even within AI, but really outside of AI. And it is really hard to start and build company. And you have to have a level of both risk, but grit that allows you to look past what is challenging you and be able to solve that challenge constantly. And a lot of entrepreneurs will talk about something similar, but there isn't a single one of us that hasn't consistently had to make decisions between multiple bad options over and over and over again. And so, yeah, I'd say like the biggest struggle, is really just how you overcome that. I'd say fundraising is another struggle. Once again, we've been in a very dry liquidity market, and outside of AI, funds are not, in plethora. This isn't just about the bubble that was 2021. This is looking historically. You're seeing massive shifts in where investments are going and just the amount of investment in general. And so, yeah, I'd say those are a couple of struggles. And then, the last would be, our dream is to do right by everyone and create a product that everyone and anyone can use. But that's hard. There are, once again, a lot of fraudsters out there. There are a lot of people who can't, have struggle managing money. And while we want to support them, we have to build our business in a way that allows us to support people at scale and in different ways. And so just finding the many paths between overcoming hurdles, meeting business vision, and aligning kind of metrics in your path to get there, it turns left and right and upside down. But you have to have a lot of conviction in what you're building and who you're building it with. I mean, I'm sure from what you shared a little of your story, you know this very well yourself here.
Mm-hmm. I totally agree with you, because sometimes it's difficult if you don't realize the struggle and then lessons learned from that implement to solve your problems. Otherwise, you can't solve your problems because you don't realize the problem at all. So thank you for sharing these few touch points that I think the viewers, if most of our viewers are business people and entrepreneurs, so our skin is thick. But sometimes it could be in negative. When skin is thick, you can't feel something if it's not that into deeper. So you need to learn from your mistakes. And when you learn from your mistake, you need to implement that to solve your problems for the future. So thank you, Ryan, for your time today. We have a few more questions to ask. How do you measure your success of your work, both for your business and for your clients you serve?
Yeah, for our customers that we serve, we have, a handful of metrics we're looking to track, both on how they're improving credit scores, increasing savings, adjusting habits. We have an NPS score that's really high, but we're looking at a handful of both financial health and behavioral related KPIs that help us assess both customers' health, success, and more. Internally, we're using a lot of traditional metrics that you'd hear, from growth to engagement to retention. Especially in our industry, we're looking at loss rates, unit economics. We're fortunate that we've had very profitable unit economics, even charging considerably lower than almost any competitor out there, and doing a system that's a unique take on how to kind of empower and set individuals up to be successful. And so a lot of that has kind of paved a wave for us on how we evaluate the mission that we have against some of the metrics. And fortunately, we've been laser focused on staying true to this. We want to do right by people in ways that help set them up to be successful and balance that across a financial product that's really hard to scale. But we look at them similarly and differently. Some of the things we want customers to do might be slightly against what's best for the business. For example, we train people on how to avoid interest payments and how to avoid fees. A lot of other business don't ever want someone to know, or they want how they make all their money. We make less money than some others because we're building good habits. It's a very interesting dichotomy. And I've had a lot of interesting conversations with venture capitalists and others around, well, the business could do a little more here if you were to do X there. And I say, but if we focus on what's best for the customer, back to those customer success metrics, in 2 years from now, I will make more than I might make tomorrow, because it's a very different type of relationship and trust and et cetera. And so we try to be thoughtful. We're always kind of evolving and, building and whatnot ourselves as we continue to reassess some of this stuff. But yeah, that is how I'd look at it and how we think about some of the success, both aligned and differently for our customers and us.
That's a great explanation, Ryan, because when you're thinking about your customer and you're training them to be more, understanding to the problem they are facing. And, as a neurodivergent person myself, I have short memory. So sometimes if I do not set direct debits, if my direct debits will not go on time, I will be penalized. And believe me, I have given so many penalties in my lives. But most of the banks or most of the credit cards, they don't give you these things like, reminders or a lot of other things like, your payment will go these dates and please be aware that you have enough funds or create a direct debits and a lot of other things. What they do, they just charge you, not, if you can pay, or if you forget to pay. So thank you very much for your great initiative. Thank you everyone for joining today's Innovative Circuit podcast. And we're going to be jumping to the fun parts now. I'm going to be asking you a few questions. Don't take it serious. You can say anything that you like. It's just the fun parts. So I wanted to ask you, how many hours do you sleep?
I'm like a 6 to 7 hours. I try at least if I can.
Okay. Because sometimes I think that I cannot sleep more than 5 hours because even if I go to bed, my brain will tell me, no, don't sleep, you have work to do. So I'm with my table most of the time until I go to drop my wife to work or pick my son from school or drop him to the school or maybe go for shopping or go for client visits. It's just like I like and I love my work. So thank you. Next questions. If you wanted to travel the world, which place that you don't want to go?
Which place do I not want to go? Interesting. To be honest, I used to love traveling a lot when I was younger. And now that I have 2 little kids, traveling is quite a bit more of an undertaking. So I'd say that actually, honestly, there's really not anywhere I wouldn't want to go other than places that might not be as safe. Right now, it would probably be Russia, Ukraine, maybe some places in the Middle East that are going through some, very large, macro conflicts is where I would not want to be. But otherwise, I wish that I could visit every country in the world that is not having any war at the time and is safe to be at. Now, if you said, where do I want to go with my kids? Very different story. I want to go places that are kid friendly, but yeah, that's what I would say. And I've been to, I think, 66 countries now. So I've been to a lot of places.
Are you afraid of heights?
I am not afraid of heights, no.
Okay. Anything that you're afraid of?
I'd say probably spiders, and bugs like that. I'd say I'm honestly probably more afraid of the depths of the ocean, like sharks and whatnot, because at least on land, you can see something. Whether you can run from it or not is a different story, but under the water, you can't really see anything. So I'd say that's my greatest external fear. Any other fears would be just around my kids' health and safety.
As a father, I can remember I wanted to ask you a very uncomfortable question. As a father myself, we used to clean when my son was like 1 or 2. How do you prefer? Do you prefer to clean your children or you want your wife to do it?
To do what? To clean them?
Yes.
You mean like to bath?
Like poo, cleaning the diaper.
Yeah. No, I share and all, do I prefer someone does certain things? Of course, if we have options, but no, I'm happy to do everything and anything that makes my wife happy and my kids' needs. So try my best here.
That's great. That's great. So thank you, Ryan. We are end of our session. It was a great pleasure to talking to you, and I hope you have enjoyed as well. And to all our viewers, thank you very much for watching Innovator Circle podcast. We hope today's conversation with Ryan Duitch, is the CEO and founder of Arro, has sparked fresh ideas and provide valuable insight to elevate your business strategies, whether it is in finance or innovation. Don't forget to subscribe to our newsletters on ICPcast.com. Share this episode with your network and leave us a review. It helps us reach and inspire more leaders like Ryan. Like our page on LinkedIn and subscribe to our YouTube channels, Sales Funnel Accelerator, and behind the scenes content and updates on upcoming episodes. Until next time, stay inspired, stay curious, and keep leading the way of innovation. Thank you, Ryan, and thank you, everyone. Bye-bye.